Hi, Barbara Friedberg here, former portfolio manager and university investments instructor, here to give you a 6-month update on my M1 Finance Pie or portfolio. And this portfolio I began tracking for you 6 months ago. It is comprised of two different M1 Finance slices, and we'll remind you of what those are included. But the goal of this analysis is to show you how diversification and different investment portfolios perform under various market conditions. Now, over the past 6 months, it is now March 2021, and during the past 6 months, we have had a robust stock market, both in the United States and internationally. And this portfolio has shown that. So we'll do a quick rundown of what's included. Then we'll look at the 6 months returns and learn a little bit how to analyze those and help you. I'll also explain to you why I chose to compare these two specific M1 Finance pre-made portfolio or pie selections, the Global Dividend and the M1 60/40. So I have 50% invested in the Global Dividend. Today's value is $3,826 in the Global Dividend and $3,584 in the 60/40. So they're not identical, but they're very, very close. So let's go drill down just a bit and take a look at what we're actually invested in. The Global Dividend portfolio is actually a mix of these 5 individual investment funds, and they cover the Vanguard U.S. Dividend Appreciation, International Dividend Stocks Fund, Wisdom Tree, which has Emerging Markets Fund, Mid Cap Fund, which includes those companies that aren't too big and aren't too small. And then we have a small cap dividend portfolio. I like this because it offers income, but also is an all stock, 100% stock portfolio. And the individual investments within this fund have a rather overall high dividend. So let's take a look at the description so you get a sense of the goals of the portfolio itself. So it provides exposure to global companies with larger than average dividend distributions. It's great for people seeking dividend income from global companies. Then let's go back and look at the other 50% of this portfolio, which is the M1 60/40. Now, this is just a straight 60% stock and 40% bond portfolio. And the 60% is invested in an all-world Vanguard stock fund. And 40% is in just a U.S. total bond market fund. And you'll notice that the goal of this portfolio is just worldwide access to stocks and bonds. So you get the returns, the higher returns of stocks with a little bit of the stability of bonds. So let's go back and kind of drill down into how this overall portfolio has performed over the last 6 months. So we'll see here today, we'll start that the value of the fund today is $7,400 and nearly 12. And then we will take a look at what happened 6 months ago. So at that time, the overall portfolio was worth $6,399. So over the previous 6 months, this dividend and bond portfolio actually grew 16% in 6 months. The overall allocation for this portfolio, if you break it down into a comparison of stocks versus bonds, which is a good way to look at your asset allocation, we have 83% stocks and 17% bonds in the total combined global dividend and 60/40 portfolio. This would probably be considered a moderately aggressive portfolio. And you'll see how it has performed over 6 months. Now, got a couple of little trick questions here. So we started off 6 months ago with global dividend at about 32.06, the stock and bond 31.92. And then today, you'll notice that it's still about 50-50 with about 38.26 in the global dividend and 35.85 in the stock and bond. Probably needs to be rebalanced soon. So it's probably 51.49%. As we said, the total portfolio grew 16% in 6 months. That's insanely a lot. So we calculated that. So you know how to do this on your own by taking the value today of the combined portfolio of 74.10, subtracting the original value of 63.99 6 months ago, divided by the original value of 63.99, and you've got a 16% growth rate over 6 months. And that does include the added dividends. So, which do you think performed better? The global dividend, which is an all-stock portfolio of global stocks with high dividends? Or do you think the 60% stock, 40% bond portfolio performed better? And that has 60% global stocks and 40% diversified bonds. Well, if you guessed the global stock portfolio, the global dividend stock portfolio, you were right, because the 6-month performance for that portfolio was a whopping 19%. And the reason for that incredible growth was because both the US and the international stock market was on a tear, experiencing extremely high returns. And because we had 60% stock and 40% bonds, and right now bond returns are actually quite low. That tempered the returns of this portfolio to 12%, which is still pretty darn good. So the combined growth of the entire combination of the global dividend and the stock and bond was 16%. So what is the takeaway from this little exercise? Does it mean that we should always invest in a global stock market portfolio because it's always going to have the highest returns, and we might as well just forget about the stock and bond market portfolio? The answer is absolutely not. Because if you are investing, you need to know that the stock market does not always go up. Sometimes it goes down. And we're going to track this portfolio every 6 months to see what happens, to see how it performs. And what you can expect is if the stock market does fall during the next 6 months, it is likely that the M1 60% stock, 40% bond portfolio will perform better than the all stock investment portfolio, because the bonds will probably offset some of the losses by the stocks. So I hope you enjoyed this quick analysis of the comparison of my M1 Finance portfolio. And as a wrap up, I will show you where you can find on the M1 platform where you can find these portfolios or pies that I selected. I went from the income earners and I selected the global dividend. And you can see here that the 5-year return on this portfolio is 73.43%. And the dividend yield right now is a robust 2.776%. Now, let's go back and look at the other just stocks and bonds that I selected, and that was the 60% stock, 40% bond. You can see that that portfolio currently has a 1.87 dividend yield, which is still pretty good, and a 5-year return of 63%. It has a lower risk than the all stock global portfolio. So thank you so much for listening to this videotape, and I invite you to subscribe to my channel if you like it, if you want to learn more about investing. And if you click on the M1 Finance link to go to that platform, I may get a small affiliate commission to support this channel. So thanks for stopping by, and I will see you next time. Bye-bye.